Okay, just give me 1 second. All right, I'm going to start the webinar and I'll start speaking here in just a minute. Okay, we'll go ahead and get started. Good afternoon, everyone. Welcome back to day 2 of Sidoti's March conference. My name is Daniel Harriman. I'm an analyst here at Sidoti. This afternoon, we are going to hear from Brillant Earth Group. That's ticker BRLT. We have the pleasure of having in attendance Jeff Kuo, the company's CFO. We also have Colin Borland as a reference point as well. He's the VP of Strategy, Business Development, and Investor Relations. Brillant Earth has been here several times and they know the drill, but for those of you who are new, we're going to give them about 20 minutes to go through the presentation, after which time I'm going to open it up for Q&A. If you do have any questions at any time during the presentation, please feel free to type those into the Q&A box, and time permitting, we'll get to as many as we can. But with that, please join me in welcoming Brillant Earth and Jeff. And with that, we'll hand it over to you. Thank you so much for being here.
Thanks, Daniel, and thank you, everyone. It's a pleasure to be back here again at the Sidoti Small Cap Conference, and thanks for taking the time to meet with us. I'm Jeff. I'm the CFO of Brillant Earth, and I've been with the company since 2015. Before we proceed, we'd just like to highlight our safe harbor language regarding forward-looking statements and non-GAAP financial measures. And you can also read these in the presentation that's been posted to our investor relations website. Brillant Earth is the next generation jeweler for today's consumer. We were founded in 2005 with a mission to really create a more transparent and sustainable jewelry industry. And we've been transforming the industry with a combination of our authentic, mission-driven brand, beautifully designed, trend-leading proprietary products, a seamless omnichannel experience across our now 41 showrooms and digital platform, and an asset-light and data-driven business model. And this is all translated into our ability to profitably grow, gain share in the large and fragmented jewelry industry. This page walks you through some of the highlights of our company history, and it showcases our leadership in areas like product innovation, media engagement, and partnerships, and then some of our financial milestones, as well as examples of how we give back to our communities. There's a number of points to highlight about Brillant Earth. If you've heard from us before, we've talked about these. One, that we operate in a vast industry that is ripe for disruption with an agile, data-driven, and tech-enabled business model that can really swiftly adapt. We use data to inform our decision-making. We have an asset-light model that is not burdened by holding excess inventory. And then a well-integrated omnichannel shopping experience that provides a joyful and seamless experience to our customers. And then a set of values that strongly resonate with our customers. We have a history of driving net sales growth, reaching $422 million in 2024 net sales, and that's a 16% CAGR over the years shown here. And then we also have been able to deliver strong gross margins, increasing to a gross margin of 60% in 2024. And this really demonstrates the resonance of our brand and our products with our customers, and our premium positioning, as well as the effectiveness of operational efforts such as our price optimization engine, procurement efficiencies, as well as our extended warranty program in driving strong gross margins. And just to highlight a few of our results from Q4, so we delivered $119.5 million in net sales, which was at the high end of our guidance range. That included a 10% year-over-year growth in total orders and an even higher year-over-year growth in repeat orders at 18%. We had a strong gross margin at 59.6%. We had a very strong adjusted EBITDA at $6.9 million, which was a significant outperformance versus our guidance. And that was our 14th consecutive quarter of positive adjusted EBITDA. So that's all the quarters that we have reported since going public in 2021. And we also ended the year with $106 million in net cash, which was our highest net cash position since the end of 2021, which was shortly after our IPO. This next slide is some of the same statistics, but for the year instead of for the quarter. So we'll move on to the next page. Then just to go through in a little bit more detail some of the other highlights. As I mentioned, we delivered net sales in Q4 that are the high end of our provided guidance, and this was our 14th consecutive quarter of positive adjusted EBITDA. Also, just more specifically to the holiday, we had our largest day of bookings in company history on Black Friday. So we were well prepared, and we delivered during the holiday season in Q4. Another meaningful highlight is the success that we've been having in fine jewelry. So in December, we expanded fine jewelry to a 27% of our total bookings mix, which was a new record for the company and an expansion of 600 basis points on the same metric year over year compared to the prior year. And so we really have been having a lot of success in driving fine jewelry, which is a big strategic opportunity for the company. We amplified with our new and existing product offerings. And then also this next point, we were able to drive a significant amount of year-over-year leverage in marketing expense as a percentage of net sales. And I think this was a highlight. We're able to drive this leverage both for the quarter and for the year. And for the year, this represented us being 1 year ahead of our schedule. When we introduced our medium-term outlook about a year ago, we had talked about driving leverage year over year in marketing expense as a percentage of sales starting in 2025. And we're pleased to have done that in 2024, a year earlier than we had mentioned, and expect to continue to drive leverage over the next few years. And we see that as an opportunity for us in terms of EBITDA expansion. We opened a couple of new showrooms in Boston and New York, including our first street-level location in Manhattan. And so that took us to 40 for the end of the year, and we're now at 41 as we recently opened a location in Southlake, Texas. We continue to operate with an efficient working capital model with inventory turns that are significantly higher than the industry average, and that's definitely a benefit to our business model. And as I mentioned before, the Q4 ending net cash position was our highest since 2021, shortly after our IPO. For these, we've covered a lot of these statistics already, so these are in the presentation if you'd like to view, but we can go on to the next page. And I think just to highlight maybe one point here on our AOV. So our AOV in Q4 did go down due to both growth in fine jewelry, which has a lower average price point than our assortment overall, as well as comparatively strong performance within sub $5,000 engagement rings. And as we continue to expand and grow in fine jewelry, we do expect that would bring down AOV on a blended basis for the company. And this is expected and in alignment with our strategic initiative of really wanting to continue to drive fine jewelry growth. It's a big opportunity for us because it's a smaller part of our business, but the industry as a whole is majority fine jewelry. So that's a big opportunity for us as we expand into the future. And just these points and images here really highlight some of the product-centric brand campaigns that we have driven and the success that we're having. So I won't go through all of these points point by point, but I think some of the highlights for the last year included the launch of our Jane Goodall collection, which you may have heard us talk about before, which has been our most successful fine jewelry launch to date, as well as the Flawless collection. And then we continue to drive strong results in fine jewelry, as well as in wedding anniversary bands in Q4 with continued outperformance in areas like men's wedding bands. And we're engaged with our community with partnerships like with VIP brides as well as influencers. And so I think we really, through a combination of like our strong proprietary products and premium brand, have really been able to successfully engage with our customer base. This is just to highlight some of our business model. You may have heard us talk about this before, but our business model is compelling in that we're able to operate with an inventory light model and operate with negative working capital. And so we have a design your own model and a virtual inventory model that allows us to offer a curated and broad selection to our customers while still keeping our inventory balance sheet low. And this allows us to just manage working capital efficiently, to keep inventory turns that are significantly higher than the industry average. And you can see that our inventory ended just about 1% higher year over year in Q4, even as we drove significant growth in fine jewelry and expanded our showroom footprint. Our quarter end cash of $162 million was about $6 million higher year over year, even after capital investments and reductions in our debt principal balance. And as I mentioned before, our Q4 ending net cash of $106 million being the highest it's been in a number of years was really a highlight. And I think the combination of profitability, efficient working capital, and a strong balance sheet really provide us with strengths and competitive advantages to make the right investments and continue to set us up for success in the future. And just to touch briefly on our omnichannel model, we do really strive to create a seamless experience for our customers between our digital and our physical footprint. This is a considered purchase, and we really want to be able to cater to customers how they want to shop, when they want to shop, where they want to shop. And I think our combination of digital leadership as well as our expanding showroom footprint allow us to meet customers where they are. When we open showrooms, we do look to drive uplift overall in the metros where we open them, and we continue to see compelling showroom uplift in our showroom footprint. We also continue to evolve and test and learn with new experiences in our showrooms. So, for example, our most recently opened showrooms feature our try-on bars for fine jewelry, and that's been a new experience and a way for people to get closer to and really experience our fine jewelry collection in a compelling way. This is also true in our digital experience. We continue to iterate to create a very compelling and engaging digital shopping experience. And I think this all combines to drive successful metrics like some of those that you see here. And as mentioned, we are currently at 41 showrooms, including the Southlake, Texas location that recently opened. And we're targeting 2 to 3 new locations for 2025, including the Southlake location. And just moving on to priorities for the year, these are some of the areas that we're really focusing on for 2025 and wanted to spend a moment on these. One is to really continue on our path to become the world's most loved and trusted jeweler, both for today and tomorrow's consumer. And I think we've been successfully executing against that. We also continue to innovate on the product front, creating distinctive, ownable collections that blend our innovative craftsmanship and designs, and as well as offer customers the opportunity to personalize to their tastes and preferences. And then we continue to strive to deliver really distinctive omnichannel experiences to delight our customers and foster lasting, hopefully lifelong relationships, and really endeavor to be the standard setter for modern luxury retail. And then, as always, we continue to invest in innovation, data, technology, people to really drive operational efficiency and to capture long-term sustainable and profitable growth. And then I thought it'd be helpful to go through our medium-term targets that you may have heard us talk through before. But in terms of our medium-term targets, which we're talking about through 2027, we anticipate net sales growth accelerating to a low teens year-over-year growth rate in 2027. We expect this to be driven by a number of factors, including the gradual normalization of engagements, growth from our showrooms, continued outperformance in fine jewelry and other non-engagement assortments, as well as growth of our brand awareness. For gross margin, we expect this to remain in the high 50s% through 2027 as we continue to drive strong gross margin through our premium brand, our proprietary product collections, our price optimization engine, procurement efficiencies, and our warranty program. And then on the expense side, from 2025 to 2027, we're targeting continuing to build on the success that we had last year, driving leverage in marketing costs as a percentage of sales from 2025 to 2027. And we expect that contributors to this include growing brand awareness, increased conversion from our showrooms, continued success in fine jewelry, and we think that all of these will help contribute to driving increased leverage in marketing costs from 2025 to 2027. And we expect that we are driving towards an adjusted EBITDA margin, reaching a double-digit margin in 2027. So that's just a brief summary of how we're thinking about our medium-term targets and outlook. So really to recap, our premium brand, our differentiated business model, including our data-driven decision-making, our seamless omnichannel platform, and our asset-light structure demonstrate our ability to deliver profitability and achieve our strategic and financial objectives in a variety of different environments. And I'd like to thank you again for taking the time to hear from us today, and I'd be glad to answer some questions.
Okay, Jeff, thank you so much for that presentation. As a reminder, if you do have any questions, please feel free to type those into the box, and we should have enough time to get to all. Jeff, we've had quite a few come in already, and I have some of my own, but just to kind of kick things off, I've seen you speak about the Jane Goodall collection for the last, couple presentations. Can you talk a little bit about your strategy for collaborations and how you look at that? And, any major collaborations that you may have in the pipeline moving forward, understanding there's, certain things you can't say about some that may be planned.
Sure. So with respect to our collaborations, we're looking to a number of things. One is alignment between us and partners that we're working with. And I think that's one of the factors that has made the Jane Goodall collection successful is the alignment of our values and hers. And we're really proud and honored to collaborate, on that front. I think another is really to be innovative in design. Customers come to us for our leadership in design, and we really want to imbue our product collections with our design language and style and bring something that's innovative to our customers. And so I think that's something that's also important. And then we want to bring it to life. We want to bring that to life in how you can experience the brand and be able to see the product and touch the product in our showrooms. And I think all of these different factors are some of the ways about how we think about driving successful partnerships. Don't think there's anything particular about upcoming collections that we have to share at this point, but we continue to expect to deliver really compelling product assortment as we're going through the year.
Perfect. Thank you. And then it's great to see, fine jewelry of being 27% of total bookings. And I know that you've touched on this, but for investors new to the story, can you talk a little bit about why fine jewelry is such an important part of your strategic process moving forward and why it presents such a great opportunity for the company?
Yeah. There are a few different reasons. One that I alluded to earlier was that it's a compelling market opportunity. It's a minority of our business, but for the industry overall, fine jewelry is the majority of the industry. And so it really represents a significant growth opportunity for us to expand into fine jewelry. I think beyond that, there are a number of different strategic reasons why I think it's compelling. One is that it opens up additional touch points that we can engage with customers. So it can be for additional life events and special occasions that you can purchase fine jewelry for gifting and self-purchase. We believe that this is beneficial in terms of being able to drive additional repeat purchase behavior, as well as be accretive to both revenue and customer acquisition economics. And I think that the success that we've had, including our Q4 results and collections like the Jane Goodall collection, really illustrate that we have a formula that works in fine jewelry, and we're looking to continue to accelerate, and we're excited by the potential to continue to expand in fine jewelry and offer something really compelling and exciting for our customers.
Wonderful. And some of these may be repetitive because you've touched on them on previous presentations with us, but as we think about your showroom strategy, and you're at 41 now, and you expect to maybe finish 25 at 42 or 43 total showrooms, can you talk a little bit more about, what you look for in the market in which you may be putting a showroom? And then are there any, regions in the U.S. where you may be a little bit underrepresented right now that you may look to expand to?
Yeah. So in terms of what we look for in a market, we have an advantage in that we have e-commerce and digital customers across the country. So we have data about where our customers are, what they're buying. And so we use that, of course, to help inform our decision making in terms of showroom expansion. And then we combine that with a lot of market specific factors, including like how people are shopping, where people are shopping in those locations, considerations about specific real estate opportunities that may emerge. And we combine all of those in terms of looking through what's the range of opportunities that we could expand into. We're always looking for a compelling ROI as we're opening new locations. And so that's some brief description of what we're looking for. In terms of regions in the US, we do now have, with our 41 showrooms, coverage across many different metro areas. I think there continue to be opportunities, both first-time showrooms in a given metro area. You've also seen us open up clusters, so multiple showrooms in a given metro area, and you've seen this in areas like New York, the San Francisco Bay Area, Chicago, Southern California. And I think that there are opportunities to cover more of our customer base with an efficient footprint. Our showrooms tend to be destinations where people come because they want to, they already know about Brilliant Earth and they want to experience more. And so that is compelling and helps us achieve that efficient coverage. And we're amplifying that by making it easier with some of our newer showroom footprints and formats for people to walk in and discover us. So it's a nice complement between the appointment-driven model as well as allowing for retail and walk-in discovery and purchase.
Perfect. Some questions have come in regarding margins. And, in the fourth quarter, you talked about, going through a competitive and promotional holiday season, but at the same time expanding margins. And, the 15%, I believe it was 15% 5-year CAGR or 16% CAGR that you've seen in gross margins. Can you talk a little bit about the strategy behind that and what's led to the expansion despite, a difficult environment and what, the company's really been able to do to see that growth on an annual basis over the last 5 years?
Yeah. So maybe first, just on the CAGR point for 5 years, that was the net sales. That was the net sales CAGR, which I believe was 16% over the 5 years shown, and we're proud of the growth that we've been able to drive there. In terms of the factors that have driven gross margin, because gross margin has expanded, during that time, we think that it's been driven by a combination of different things. One, like our premium brand and really being focused on premium brand, differentiated products. We're not discount oriented like many others in the industry may be. Our price optimization engine, which allows us to continually test and optimize for that right mix of top line capture as well as gross margin capture. And that's something that is a living, breathing thing that we're continuing to iterate on and improve as we get new data. And then also things like procurement efficiencies and our extended warranty program. Those have all contributed to our strong gross margins, and we expect to continue to work to drive as much gross margin performance as we can using some of those same levers.
Perfect. And my apologies on messing up the
No,
metric for the
no
16%,
worries at
but
all.
you're right, it was net sales. Can you touch a little bit upon the competitive landscape and maybe, how that plays into your strategy moving forward?
Yeah, so the competitive landscape for jewelers is, approximately 2/3 of the industry is independents, and so it's relatively more fragmented industry than certain others in the retail and consumer space, and we think that presents opportunity for a company like us that has a compelling brand, an assortment of products, a really distinguished omnichannel shopping experience, and really to take all of those things and really make a difference and offer something differentiated to our customers. And we think it's a large industry, it's a fragmented industry, and we think that we have a very compelling offering to make to our customer base.
Yeah, and it's been fun to follow the story as you've been coming to these conferences over the last year or so. We've got about a minute or two left, so I just wanted to turn it back to you for any closing thoughts or parting thoughts for investors that may be watching this that are new to your story.
Yeah. No, thanks, Daniel. It's again a pleasure to be here. I think that we do really offer a compelling mix of our brand, our experience, our products, and a business model that set us up to be a differentiated and disruptive player in the jewelry space. And we thank you for the chance to be here. Thanks everyone for tuning in, and look forward to connecting in the future.
Great. Jeff, great to see you again. For all of you in the audience, thank you for your participation. I think we were able to get to most, if not all, of the questions. And Jeff, on behalf of the attendees and everybody at Sidoti, thank you for sharing Brilliant Earth's story again and being with us again at this conference.
Thanks, Daniel, and thanks everybody.